morning, afternoon, whenever you're watching this from. Welcome to the Feel Good Finance Weekly Recap. I understand I am a day late. I apologize for that. We kind of wanted to knock everything out, so we got your Tech Tuesday recorded too. That'll be coming out tomorrow. Should be awesome. There's a lot of good stuff. But I want to recap what happened last week because it was an interesting week. I know I talked about it on my story this morning. It was like an ominous week. It was kind of like... it feels like we're building up to something, right? And that's a combination, I think, of a couple things. So the first one is the potential oil crisis they're talking about now. And typically, when you think potential oil crisis, you're like, okay, shortage of oil, we stop producing, something like that. This is the opposite. So what's being discussed now is that investors are basically being pushed to invest in ESG, environmental, social governance companies that are responsible with their productions and making sure that they don't pollute or anything like that. So they're having to shift their concentration of funds out of the oil companies into these renewable energy companies. And in my mind, I'm thinking immediately, okay, less money's going into oil, no big deal. It's probably going to drive prices down, right? Like that makes sense to me. Was it higher supply, lower demand, or yeah, I got it right that time. But either way, it actually did the opposite. So with less investment in these oil companies, they're having to basically drive their prices up of the finished product in order to compensate for having to spend more of their own money on the front end in production. So what's being talked about right now is that we're probably going to see a even larger increase in oil prices coming up on the probably Q3, Q4 this year. It's not the end of the world, I don't think, because when you look at this, you're like, okay, we're gonna continue on the trend of pushing people towards buying more electric vehicles, and obviously, when the pendulum swings this way, it has to go back that way. It just goes one and another. It's nothing new. We've been over this before. The next one on this same train of thought is that China basically said, the Chinese government said, no more Bitcoin mines. We don't want to do it. It's illegal. We're gonna have to shut you down. Why did they do that? Is it an economic reason? Kind of, sort of, but they did it because it is burning so much flippin' energy and they're having to use so much electricity to run these farms to mine these Bitcoins. So when you say mining a Bitcoin, basically what that means, if you didn't know, is you pretty much have to set up like a warehouse of computers and a whole ton of processing power, way more than one single person has. Most single people have, I guess. There's always someone. Either way, more than you and I have, most likely. And you have to set all those computers up, and those computers are solving algorithms and problems constantly. And by those solving, they're rewarded with Bitcoins, magic, right? Anything like that. So, but you have to think about, if all those computers are running pretty much all day, every single day, that's a lot of electricity. It's a massive electricity bill. And especially if that gets passed on to the city and the power grid, you're going to put a lot of things under strain. Think about what's been happening recently across the United States. We're having a lot of weather phenomenon. Texas comes to mind, the big Texas freeze we had this year that basically shut down their power grid. They just weren't prepared for it. So when you think about something like this, you're like, yeah, it should worry you. And you say, okay, well, people aren't going to listen. There's obviously still going to be these kind of things happening. But on the other hand, you should say, oh, we're aware of this problem, and humans are really good at solving problems at the end of the day. So I have no doubt in my mind that we're totally going to fix that up. On the other side of that problem, it actually dropped the price of this asset. I hate using that term for cryptocurrencies. They're not truly an asset. They kind of are, but it basically has dropped the price in half since all this has happened. And this is the same thing that we just talked about, where it makes no sense. You think, okay, there's fewer people mining it, which means the supply is now shrunk. And if there's a lower supply and the demand has not reduced at the same level, price should skyrocket, right? Opposite has happened. Wild. It's going to be in the next 2 weeks. I think everyone's going to kind of figure out what's going on, and then maybe we might see more crazy fluctuations. But obviously, as we move towards the end of the year, we're going to start to see SEC and Fed policies revolving around these decentralized currencies, and that's going to have a massive effect on it in the next few years. Moving on, we had some nice and juicy fraud, I guess you would call it, something like that. Potential fraud, basically. So Lordstown Motors is the name of a company that is trying to make your new electric truck. They're focused on building trucks for other companies, like building a big fleet. Think about how Amazon just basically has their massive fleet of cars they now own. Lordstown Motors wants to be the middleman, and they want to say, buy our electric truck. You'll get it for cheaper than what you could manufacture it as. Use it. They're trying to have everything set up so where it would work for you. That's their value offering. So they came under fire recently because Hindenburg Research, which is a notorious short seller firm, they do this all the time. They find these companies and they uncover fraud within the companies, typically at the highest level CEO and C-suite board execs. And so they said, there's some really shady things going on. These people are basically lying and making up things about pre-orders, and they have completely, what's the word? A lot of fraud. They basically said whatever they wrote on their financial statements is incorrect. So that led to the CFO resigning in this past week. She absolutely dipped out and said, yeah, I'm just not going to deal with this. So that is what it is. That led to an investigation that is just wrapping up, probably going to be wrapping up this week. This is where it gets juicy. The investigation was led by like a special panel from the board of directors. And what they found is that in February, March, something around that time, there was many millions worth of shares sold by the C-suite execs. They all sold their shares when the company went public. And so everyone's like, well, maybe that says something about it. That's a big red flag automatically. So this special board found, no, it actually has nothing to do with all the bad news that just happened to come out 1 month later. I don't believe it for a second, but who am I? Gosh, it's so funny. Companies keep biting the same bullet over and over. They can't help themselves. They can't get out of their own way. And the profit wasn't enough to be like, so I think the biggest one guy was like $4 million. And I was like, okay, so to you and me, $4 million is a whole ton of money. I could confidently invest and run my life off $4 million the rest of my life. But for people who are already at that level, you already know they're taking home $2 million a year, no problem. You'd be like, okay, for me to risk going to jail for the next 30 years, or securities fraud has different levels, I guess, but I don't know how long. I don't want to go to jail at all. But either way, for you to have to risk that, you'd want to be like, okay, it should be enough that I can go get an island and just not exist anymore. Like I can be wherever I want. I'm talking like $50 million. Like for a C-suite exec, that would be tempting, I think. I can't see why you would risk yourself over an amount of money that you're probably going to make in the next 2 years anyways, especially if you're confident about how your company's going to perform. Moving on to the commodities. So the lumber prices, they hit the peak and they dropped, which we were all kind of waiting on. And this happened. I talked about this with Joey on Tuesday, but what happened was so many people have been scrambling and just saying, we need the lumber. All the residential developers all need the lumber. We have to build. We'll just pay the price and hoard it and deal with it later. So you've got all these people who've been stocking up and overpaying for this commodity for 6 months, give or take that time. Time doesn't matter at this point. So they have all of this lumber, and all of a sudden all the people who are buying it from them have realized, oh, everyone has this asset now. We can negotiate price. So the pendulum swung back. And so the lumber prices dropped. They're still significantly higher than they were a year, 2 years ago. But basically, I think it was like $1,700 1,000 square feet or something like that, and now it's at like 900 something. Either way, I'm curious to see what happens if steel is the next one, because I know the steel plants basically just restarted, and if the same thing happens, if we just can't get out of our own way and not learn the same lesson, that'll be interesting too. But I don't think that the building is going to slow down. If anything, now that the prices are lower, that might just be incentive to keep moving, because these companies, now that they're losing their money on the commodities, they got to make it up with the products, right? No matter what, they got to make their money, and it gets passed on to someone eventually. The final thing we're going to talk about, and I know you hear this all the time about the microchip shortages and all that. The news came out that it was just one firm over in Asia. I can't remember. I think it was Singapore or something like that. I'm a bad reporter for not knowing that. But either way, it came out that there was one little tiny firm that was basically supplying all of the major companies for this. And when they went under, or they shut down, shot everyone in the foot. So unless you've been living under an absolute rock for the past, again, half a year probably, you've been hearing about how there's a massive shortage in these microchips that go into everything from computers, cell phones, cars. That's why your used car is worth so much. That's why you get calls every single day when someone says, your extended warranty's up, we'd like to buy your car. we run into the same problem with the houses, right? You can sell it for 3 times what it's worth. What do? You have to buy a car for 3 times what it's worth now to replace the one you just sold. So now that the microchips are basically done, what that did is it pushed, in the last 6 months, it pushed all the end user items like the vehicles and computers. It pushed the cost of those up as a whole for the producers. And so what that meant is that they just couldn't produce as much, which is why we had the shortages. I'm sure some people have realized it's almost impossible to get things like a new car, a new Xbox, PlayStation, even phone shortages is becoming a thing. So it was really hard to get those things. That supply is about to not be a problem anymore, but the issue is going to be price. So the reports are coming out that basically they said, look, we can produce it now. We're just going to have to pass the price on to the end user. So expect everything as far as technology goes to get a heck of a lot more expensive in the next 6 months. And I think what's going to happen with that is it's basically going to be used as a giant signal for this is proof that we're experiencing massive inflation, which it could honestly be just a coincidence for all these factors at once, or you could say that it is true, whichever it is. We'll wrap up with this. On Tuesday, we are getting to hear the questions that are going to be asked of Jerome Powell and the Federal Reserve about their target they set this past week, where they said, hey, we're officially committing, we're going to raise interest rates by 2023. And everyone's like, that's 2 years in the future. What does that mean today? Because we want to know, we have really short memories. We want to know what it means maybe at most a month from now. Because if it doesn't affect us now, it affects us in 2 years. Who cares, right? So that'll be really fun to see. I can't wait to talk about it eventually. And we'll probably do that one next week because knowing Jerome Powell, he's going to throw the Band-Aids on and he's going to say everything's fine, don't worry about it, it's going to be okay. But someone's going to glean some information that we want to hear. So either way, again, I've been saying this. I mentioned it on Tuesday too. We're going to be on Spotify soon. We're working on it. I got all the programs down that need to be done. And so basically what we'll just do is we'll have this on YouTube because some people like YouTube. I don't know why you'd want to look at my face while I'm hearing me talk, but if you do, that's fine. And the next one will be on Spotify so that the rest of us normal people can listen to it in the car on the way to work, right? Either way, have yourself a terrific rest of your week. See you next week.